Hi, welcome to today's edition of Market Analysis for today, the 6th of October. I'm Giovanni Benacour, operator and educator with Vantage Markets. Well, what a day yesterday, huh? The Organization of the Petroleum Exporting Countries, OPEC Plus, and its allies, including Russia, plan to cut production by 2 million barrels a day, the largest reduction since the pandemic began. But cartel members are already failing to meet quotas, so the effective cut will be lower. President Joe Biden has pushed for more oil production to lower gasoline prices. The White House said he was disappointed by the short sighted decision. Administration officials said the U.S. will release another 10 million barrels from its strategic reserve next month, and added the president will continue to direct releases as appropriate. Oil in the reserve has fallen to the lowest level since July of 1984, as per Reuters reported. Meanwhile, White House Senior Energy Advisor Mr. Amos state estimates that the OPEC move amounts to a cut of roughly 900,000 barrels a day because many cartel members can't raise their output. He said they are already 3 million barrels per day short of their quota. This brings the administration to consider reviewing sanctions to Venezuela so that companies like Chevron can go back drilling there. But the White House seems to forget that Maduro is a friend of Putin. Go figure. Meanwhile, equities markets have gotten giddy so far in October, dreaming of a dovish Federal Reserve, but they were abruptly woken up yesterday. Not one, but two Fed officials opted to bang the drum for the central bank's current path of aggressive rate hikes yesterday. San Francisco Fed President Mary Daly and Atlanta's Raphael Bostic both moved to quell market expectations. The S&P 500 fell nearly 2% at one point, but recovered to notch a 0.2% loss. Nonetheless, the two-day rally came to an abrupt halt. That being said, markets do appear to be largely ignoring the Fed's hawkish insistence, with the traders seeing a pause in hikes early next year and rate cuts beginning in the second half of 2023. Now, markets need to look to 6 to 12 months into the future right now. While the Fed is focused on the sky-high inflation rates, the president, which may explain the disconnect, it's the economic data, not the Fed speakers, that really hold sway. Now, job openings fell by about 1.1 million in August, but more data showing a cooling economy is surely needed for a pivot to be confirmed, which is why Friday's jobs report is so crucial. What's at stake is the market's call that peak hawkishness is here and that a pivot point isn't far off. Strong members on top of Wednesday's robust private sector data could see markets backtracking on that view and sharply. With that being said, let's take a look at what markets will be doing in a couple of minutes, and perhaps we'll be online by then. Now, we're looking at a NASDAQ chart, a daily chart, and we see that the RSI is in neutral zone. The market seems to be steady, holding above the pivot point of 11,500. I have my resistance at 11,800 and our support at 11,300. Now, the contemplation will be that the markets will probably make another attempt to go higher or enter into a consolidation stage right above our pivot point. So that could be the scenario. As per the S&P 500, we're seeing that the market is on a downside. It is on a down leg. So we could probably see markets come down towards the pivot of 3,750 and find support around there as the RSI is still in neutral zone. But we do have the 52-week moving average way above the market, and it is trending down. Now we have here the crude oil. Crude oil is obviously the big talk of the day, of yesterday. And will we see a continuation of that rally that we have seen in previous days? Now, I believe the market has already priced in what was going to be said yesterday. And since the market came out with that 2 million barrel notice, it was factoring. That's basically it. So that news alone didn't send prices higher when it came out. We saw that previously. So what we could probably see is the market to trade lower towards the $85 support level. Should we hold here, we could probably see the market make another attempt at $87. Market has just opened, and so we could probably see if the case is that we want to be able to bring prices lower. We have another attempt at the 85, break this 85,500 support level, and then trade down to 85, psychological round number. 84 could be probably the case, and the low of Monday being at 82.68. So that could probably be the case later on today. As per Nat Gas is really trying to stay around the $7 mark. The 200 moving average is creeping up anyhow. Market could probably come down towards it and find some support. RSI is still in neutral zone, just shy of being in oversold territory. Then we have here gold. The 52-week moving average is above the market. Acting as a resistance, dynamic resistance. Probably gold could probably come down, and test the 1700 psychological level. Should it hold, we could probably see a nice little bounce of it back up towards the 52-week moving average. Then we have silver. Silver is also up, sell-off. The 52-week moving average is below the market in this case. The RSI is not in the overbought territory, so that could probably give us an attempt of the market to come down to $20 as the support, psychological support. As per copper does have the 52-week moving average above it, trading below the pivot. So we could probably contemplate another attempt at 340 and find some support around here. The RSI is neutral. Then we have here Bitcoin. I think Bitcoin is going to be trading in this very narrow channel above the pivot point, below the 52-week moving average. So they're trying to stay around 20,000. That's what I think will happen. Then we have euro. The euro it did try to come back to parity. It lost that battle. It is coming back down towards the 0.98 cents. That most likely will happen. As far as the US dollar, Canadian dollar, well, if the crude oil does happen to trade down to 85, 84 and a half, or 84, we probably see a nice pump on the Canadian dollar towards the 137.50. I have my resistance very close to it, and that could probably happen. But on the other hand, if crude oil happens to rally and moves higher up to 87, 88, 89, then we could probably see a retracement on the Canadian dollar below our pivot point down towards 136 psychological level. And as far as the dollar index goes, well, dollar index, and it's going to continue to stay strong. So as the dollar index continues to trade towards the 112 resistance level, we'll see that pressure being applied on other assets as gold. That could be the case, okay? So keep that in mind. That is it for me now. Have a fantastic trading day.